l'ai pas dit, je suis originaire de la Côte d'Ivoire.
I'm from the Côte d'Ivoire, and after spending about 17 years between Montreal and Abidjan, I am here since 3 months, and I am right now living in Marrakesh. Once again, thank you very much. Shukran Bazaf in Arabic. You spoke some time back about the energy, and yes, indeed, this attractiveness which is not only financial, but it is also of a human aspect. It's following the leadership and also the vision of His Majesty the King Mohammed VI. God assist him to moderate this panel. I would like to first invite one loyal person to us, an economist who's passionate about questions about finance. He's also a presenter and journalist. I would like to call my dear brother NYANG, and let's give him a round of applause. Thank you very much. Amma, I would like you to be really kind with our panelists, please.
Try.
Please try. Ramah sous vos applaudissements.
Let's give him a round of applause.
CGTN Africa, and I freelance for Bloomberg once in a while. I'm very glad to see all of you here from all over the world, from the east, from the west, from the north, from the south. It's very good to see you all here once again for the 3rd edition of AFIS. I'd like to start to set the stage for our conversation with a very short framing issue. We're a continent of scale, right? Some of us flew here for 11 hours, 14 hours to get to this part of the world. We're sitting in a country that has 200 gigawatts, by some studies, of untapped wind potential. We're home to a continent that has 90% of platinum group metal reserves in the world. Roughly 2/3 of cobalt reserves in the world, they're right here. That's one end of the scale. A lot of untapped potential. What's on the other end of the scale? We have 50+ countries. We've got 30+ different sets of rules and regulations pretty much across the board. And if we're going to replicate some of the things that have been done, for example, here in Morocco, right? You've managed to overtake last year's, I believe. South Africa is the largest single vehicle industry, right, in Africa. And the estimate, I believe, from Fitch is that 614,000 units are going to roll off the production line this year alone. There's a lot of potential, but how do we get from potential to actualization? That's what we'll try to explore in detail in this conversation. We already, of course, have Nadia, Finance and Economy Minister in the Kingdom of Morocco here on stage. I'd like to bring up the other panelists for this conversation. Jeremy AWORI, Group CEO at Ecobank. Please come up to the stage. Also joining us on stage, we'll have Jules NGANKAM, who's the Group CEO of the Africa Guarantee Fund. Jules, please. Mohamed KETTANI, the Chairman and CEO of Attijariwafa Group, will also be joining us for this conversation. A 30% increase in their market cap over the last 5 years, since January 1st, 2019. Pretty impressive numbers. We'll also have Sérgio PIMENTA, the Vice President for Africa at IFC. Right. We'll have a very interesting conversation over the next 40 minutes, but I want to start by setting the stage. Minister Nadia, since you are our host, you get to go first on this one. We're getting into an interesting situation where payment systems potentially might start to bifurcate in 2025, 2026, and so on and so forth. From where you stand as a policymaker, as a rule maker, where we have this entire group of CEOs, we're trying to build companies that will aggregate at scale. How do you confront a problem of that nature?
we are all living with the emergence of new payment systems that are the reflection of changes in geopolitics, but also in economic power. And I think it's definitely, as always, a challenge and opportunity for all developing countries, and Morocco too. The challenges is that emerging countries that are doing their best to, I would say, develop the economies, we can face, I would say, some fragmentation and challenges to trade. So, but on the other hand, it's also an opportunity to have, I would say, more efficient payment systems and also to reduce the costs. And we saw that during, as an example, during the Ukraine-Russian war, a lot of our countries just struggled with the payment system to buy our energy and our wheat without being, I would say, part of this. So I think that the economy, the world is moving, and we now need to prepare ourselves, and therefore we need to invest in our regulation infrastructure and have a strong financial, I would say, sector to be able to be ready, I would say, for all these changes.
Indeed, and I'm sure bankers will also weigh in on that question. But something else that was of note when we were prepping for this was looking at how Morocco has changed, right, with respect to crypto assets. There was an outright ban on crypto assets in 2017. The central bank here has changed its tune quite recently, indicating that, you know, they're going to be drafting a law to regulate crypto assets. And I know there are some crypto fans in the room at the moment. As a policymaker, how's your thinking changed over time with respect to crypto? Is there any value that it brings into conventional financial systems?
I must confess, as a policymaker now for some few years, that we are always behind, I would say, the entrepreneurs and the innovation. So we have no choice than adapt. And as always, I think crypto has been a challenge, so we were observing, not ready to go for it, but I think we have no choice than get ready. As Minister of Economy and Finance, definitely not in charge of this file particularly is our governor, but I think he made some announcement that the central bank with the Ministry of Economy and Finance is prepared for the regulatory. Of course, I would say, I was born in the other centuries of crypto is scaring a lot of people from my age and above, because it's a lot of risks, it's a lot of volatility in prices, it's also fraud. We have our tax administration CEO here, so he's always scared about frauding on taxes, but also anti-laundering money. But this is the risks, and they are there. But we also can see it as an opportunity, definitely, for financial inclusion. Morocco have been doing a lot. We have a national strategy for financial inclusion, and my colleague, the chairman of Attijariwafa Bank, can agree that we did progress, but we still need other solutions for the rural world, for very small companies, and hopefully crypto can be one of those in the future if we have the strong infrastructure, regulation, and all the safety, I would say, around this. Same thing for remittances. I just said that it costs a lot. It's 8% on average. So let's get prepared to the future. The future actually is already here. And as always, Morocco is considering the openness to what's happening in the world and strengthening our financial sector and regulation to be ready.
Indeed. And, you know, every single time we have conversations around cryptocurrencies at these events, it always tends to be very, very heated. So for the next 48 hours, I'm sure you'll have a lot of interesting conversations. I want to come to our bankers on the panel, Jeremy and Mohamed. Scale, right, is what is needed, right, across Africa. We need an enormous amount of scale to bring all this potential, right, to market. 200 gigawatts of wind potential here in Morocco, 10 gigawatts of untapped geothermal potential in Kenya, and so on and so forth. But when you're running institutions across 50 plus different jurisdictions, what common rules and regulations would make it easier for you to scale? Jeremy first, and then Mohamed.
Thank you, Ramah. You talked about it, in your introduction. If we look at a bank like Ecobank, we're in 35 out of the 54 countries. We have probably 40 different regulators and different regulatory regimes. That brings a lot of complexity, which also requires explaining to customers. Customers want to do business, they want to move money, they want to trade. So what do we look for? We want to support our customers to do business. We've talked about Africa continental free trade. Now, if people are going to trade, businesses are going to trade, they need to be able to make payments. And the challenge in a lot of places is often access to capital, and access to be able to move your capital. And I think we've faced a very difficult last few years with COVID, Russia, Ukraine, shortage of dollars. So what we see is more open regimes, able to provide currency when people need to buy and sell goods is essential. We'd like to see more harmonization of payment rules, like you say. We also need to really focus on still keeping an eye on how we can use technology to be able to bring down the cost of payments, whether it is payments that are being done by individuals across, as you say, the cost that customers pay in Africa is in many cases even into the teens, not just the 8% Her Excellency talked about. So when funds come into the continent, we're losing a lot of value on that side. And we also need to remember trade is also not done by just big companies. It's done by smaller individuals, right? So you could be a tailor in Lagos selling goods into Lome, right? And we want to be able to make those payments in a frictionless kind of manner. So I think if we can look at the frameworks, the regulations, whilst being mindful that ministries of finance and central bankers still have to manage things like their foreign exchange reserves, that will help. I think we're also trying to work on frameworks that allow payment in local currency. But if payments are going to work in local currency to avoid the pressure on the dollar, we need to see more trade so those currencies can move around. Otherwise, we will end up with currencies getting stuck in some locations because of the dislocation in trade. I think the last point that I would mention is really around working within a global regulatory framework that inspires confidence and trust. Because if people don't trust that their money is safe, can move easily, will not get trapped, and will be subject to the rules, the global financial rules, we will struggle. We're seeing, if you look at correspondent banking, the number of correspondent banks in Africa is reducing over time. And it's because they perceive the risk, reward, return not valid for them in this particular instance. So that doesn't encourage foreign investors to come and investors across Africa. So we need to invest in those. We need to give confidence that we are actually following the global regulations that encourage investors to come in. And then I would say, last but not least, investors want to bring their money, whether it's from one country to the other, but they also want to be able to take out their money when they need to take it out, whether it is to make investments in other countries, whether it's to pay their trade receivables. If there is that feeling that you cannot take that money out or you cannot make your payments, then we end up with dysfunctional things like hoarding, which now drives up price of currency, shortage of currency, which then makes it more difficult to make those payments.
Je crois, moi je reviens sur un constat qui...
I think when we talk about African banks, and when we talk about their responsibility when they're confronted to the international market, it's about the progression of the different African banks. It actually gives an important weight to this and a very heavy responsibility on the financial sector in Africa, but also on the different governments and regulators, for the reason that the African banking sector is actually facing an important and a challenging situation. It has to first help in the transformation of the continent, because we need to cover up for the deficit in infrastructure. As was mentioned by Mrs. the Minister, the 1,102 billions of dollars for the horizon of 2030, and this is coming very soon. It's also about facing climate changes, including its impact and the risks associated to them that we all know about in our African continent, and that is bringing a number of threats in the financial banking sector, which has in fact to provide further help and support for this financial sector. We also have another challenge linked to transformation towards an industrialization of the African continent. So which means that we need to make sure that the value chain is sort of settled in the African continent. And in parallel to this, we need to also deploy a number of efficient strategies for financial inclusiveness, and to make sure that we can have as much as possible citizens who are a part of the banking system, and also democratize the basic financial services. And as was reminded by Mrs. the Minister, who knows today about the financial sector, which is facing an important fragmentation at the continental scale, including what is happening today with the SLECAF, which is considered to be the pillar and which is supposed, in fact, to accelerate the integration. But I believe and I think that we need to start from the most important objective, which is to, in fact, face the different problems and issues that we are facing. It was mentioned by Mrs. the Minister and also the General Director of the co-banks, and as well as Mr. PIMENTA, in order to bring about an efficient system for transborders system between different countries, in order to satisfy, of course, the needs of investors and the economic operators of our continent in interaction with other operators from other continents. It's important, and it's even a must, to come to a point to put in place a system, an integrated system of payment. And this in 1973, when the most important international banks they all were united to put in place the SWIFT system, and none of them was thinking about the success of this operation, and nobody expected the results of this. And today, the SWIFT is dominating the system of transactions in the financial sector, and we are seeing even the start of a new payment system, including Asia, in the Arab world, the UNA initiative, mostly, which was initiated by Arab countries to facilitate the payment of the trade between Arab countries. And why should we not unite around the table and discuss this issue and try to reflect upon a system of payment which takes into account the complexity? It's not something easy. We have about 42 currencies that we need to manage in the African continent. We have to be aware of this, and we have important economies with macroeconomic ecosystems that are completely different. We have macroeconomic frameworks that are the most stable ones, and they are not numerous, and two, the most volatile economies, which makes our task very difficult to put in place a payment system or an integrated payment system. I believe that we have to do this on a step-by-step approach. If we have to project ourselves in 2019, and I would like to refer back to the film that was projected or which was broadcasted this morning, we need to reflect upon this in a coherent economic bloc by taking into account a stable macroeconomic framework in order to initiate a payment system project, which is in interaction with fintechs or innovating fintechs that are providing today very interesting offers. we need to make sure that we can come to a point where we standardize different norms and standards by calling or using different communication protocols that we have today at our disposal and that didn't exist in 1993 when SWIFT started to be used. So I think we need to come up to a point to bring about a solution, a relevant solution. We are talking today about integrated payment system, but I think now we are, this is a great opportunity for us, which will be in fact aligned with the action plan of the ZLECAf in order to have a real reflection and a good projection of mutualizing this in a way that we can invest in in an integrated payment system within a regional area. We understand very well that it's an important, complex project.
African payment system. It's going to be interesting to see how potentially we could, as a continent, build perhaps into that next SWIFT competitor in future. Jules and Sérgio, I want to come to your organizations because you both had double-digit growth, right, along your business lines in Africa last year. And there's a lot of interesting work that you're doing in trying to make it easier for capital to flow from point A to point B, for businesses to be able to grow. There was a $200 million loan, I believe, for a Moroccan firm that deals with renewable energy and irrigation. Your portfolio on guarantees has continued to grow relatively strongly. Can you maintain those growth rates into 2025 and 2026, given all the volatility that we see at the moment? Jules, then Sérgio.
Yes, thank you, Ramah. Yeah, so in terms of growth, what I would say, we had a growth over the past 10 years that was close to 40% per year. So it's something that we have to maintain, because when we look at what today is the demand in the market, we cover mainly the SME space. And the SME financing gap today in Africa is getting closer to 400 billion. And what we've been doing over the past few years, us and even our partners, we've covered less than 10%. So we still have that 90% that we still need to do something about it. So the growth has to be there. And one of the main challenges is to mobilize this capital. And the reason where we see that growth, I would say, what we call the 3R. So the risk, the reward, and the regulation. So on the risk end, we can see what has happened over the past few years in the African continent. You see, you take the currency risk. Most of the currency have been very volatile, and they lost. So they were divided to dollars by 2, some currency even by 3. You take the case of Naira, they moved from, before COVID, we were like $1 for around 400 Naira. Now we are $1 for 1,600. Yeah, you even take the Ghanaian cedi, you were at around 5 for $1. Now we are close to 20. Yeah, so that has been the case for most of the currency. And then we had the sovereign crisis, also where most of the African countries, when you look at their 10-year debt, they were paying in numbers that was very close to double digit. So when you have all this risk in the system, we see more and more demand from the investors to see how they can mitigate it. And then the regulation. So the regulation is also getting tight, like very tight, as they see the inherent risk that we have in the system. And the trend we've seen in the market is that we have some African countries moving gradually, from Basel II to Basel III. And that also comes with additional capital constraint, liquidity constraint, and also all the constraints that are kind of related to the solvency. 2018, we had the accounting rule around the AFIS 9 that was also totally shaped the market. Yes. So for that reason, we believe that we'll have the growth going at the same pace, at least for the next 10 years. Thank you.
Sérgio?
Look, I mean, first of all, thank you very much. It's great to be here. But first of all, I would say that our growth at IFC over the last few years has been really mostly a response to what was happening in the continent. And we are a development institution. We don't grow for the sake of growing. We grow because we want to accompany countries, continents, when they're going through a trajectory of change. And Africa has embarked in that change, and we have realized that. We wanted to support, so we also made a number of adjustments internally to be able to support Africa as it was growing, as it is growing. it's also a bit of a counter-cyclical role in the sense that in times of crisis, in times of challenges, we can be helpful, and I believe we are more helpful. So that's when we really want to do more. We've done a lot to grow our presence. We have expanded our markets. We have now offices in 40 countries in Africa. We have staff across the continent. But the biggest change that we have made is that we have really, realizing the direction the continent was going, we really focused on helping local and regional companies and groups. And I think in the financial institutions, it's very clear. I mean, many of you in the room here work with us in your plans to expand across the continent, right? So when we see that trend, and Mr. KETTANI was saying about, international banks pulling out and so on, well, the demand for the services of the banks is there. So there are a number of financial institutions that have really seized that opportunity and said, okay, we want to do it. So, but who can support that? I think institutions like IFC have been doing that. We want to do that, and we'll continue to do that. Now, in terms of continuing, going forward, we want to continue. We have the capacity to expand financially to provide more of what we can do. But the needs are also very important. And one of the roles that we see key in our intervention is going to be what we call mobilizing, right? So it's not just bringing our own funding. It's also helping players who are ready to finance the continent, from the continent or from outside Africa, to come in, and we help them bring in that type of financing. So it's a very important direction in what we're doing. I think the other part that will also generate a significant growth in our interventions is the work that we do very early on, because we realize that, if you, as a financial institution, you cannot just wait that a project is ready to be financed and come and sign the check and that's it, the money goes out. We need to engage with partners very early on, with regulators, with the authorities, with private sector players, with financial institutions, and say, okay, how do we respond to a certain development challenge? How do we bring a solution? And that's one of the areas where we have been bringing in more and more resources and helping us build a pipeline of opportunities for the future. And an interesting part there is that we've, and I had that discussion with a number of leaders of financial institutions in Africa, is that the African banks and the African insurance companies, the African financial institutions realize that they have also that role to play, right? That is, it's not just providing funding, it's really help develop the continent. A strong, resilient banking sector is absolutely key to the future of the continent. And that's one of the areas that we see happening. Our teams are very motivated to support that. And many of my colleagues are here in the room, and I really want to thank them for all the work that they've done to bring IFC where it is today. But we will continue. I can assure you we'll continue this growth with everyone here in the room and other partners. So thank you.
I know one of the concerns that individuals in the room will have is around the cost of capital, right? Cost of capital has been pretty elevated for quite a while now. And on one hand, there's this dichotomy that I alluded to at the start. There's enormous potential in a whole host of industries, energy, mining, agriculture. But the cost of capital and the perceptions around risk, right, also need to be managed at the exact same time. And I want to look at it from the outside perspective, right, from the perspective of the IFC and the AGF before I get to the bankers. What needs to be done to make it easier to, A, mobilize that capital at scale, right? Because, for example, in Morocco's case, if you want to bring that 200 gigawatts of wind capacity into the market, they're going to need a ton of money, right? The better part of $80 billion. How do we bring that capital at scale? And B, how do we de-risk projects of this sort?
So first, you did mention, and rightly so, the cost of capital and the perception of risk, because they are linked. And one of the areas that we all need to focus on is this perception, and not just perception, of risk. What is the risk premium to invest in Africa? And that for me is a very fundamental point. And I see that the efforts that regulators are doing, authorities are doing to improve business environment, to provide a certain stability and a certain predictability in business so that investors are more comfortable coming in. I think then there's an effect of, sort of when you start, things will follow up, in the sense that when you have good success stories, people are investing, the investments are successful, then others come. when we see in a country in Africa or elsewhere, but it happens in Africa, that there are some issues around business environment, lack of transparency, there's a bad incident of a dispute that is perceived by the market as sort of not a commercial dispute or not a fair dispute between authorities or between authorities and a private sector player. The effect can be very, very damaging beyond whatever transaction it is. But on the other hand, when you build that trust that the environment is the one that you have to invest in, then people do come in. And then suddenly you see prices coming down, cost of capital coming down, and opportunities being more interesting. Now, the question is how do you manage that and how you get there? And I think, so working on building that trust is important. And then I would say in the meantime or alongside, I would say, we are on the IFC side, and a number of other DFIs are doing the same thing. We are bringing sort of what we call blended finance, right? So sort of, I would say, artificially reducing the cost by introducing subsidies that are limited. I mean, they are what they are. I mean, we have to leverage them to their maximum, but that allows to sort of encourage people to do the first step. So let's have something that is somehow subsidized to create the momentum, and then over time, that subsidy element can disappear, and we just have commercial transactions, financial transactions that go on commercial basis that can develop. And that transition is something that we are developing. I think there's a number of DFIs and partners in that space that are in the room with us here, and I think we all share that approach of how do we then encourage doing that. And then my last point, don't want to be too long, is I think, and this is what I've been seeing I've been in my position for now 7 years, and I've seen an evolution in this continent that is absolutely amazing in a positive way on a lot of these actions. And the main one is the fact that as an international investor, you will never invest in a country where locals don't invest, right? So when you look at the continent, and this is what I see in Africa, people are investing in their own country and they're investing in the continent. And that's the best sign of confidence that you can have. So all I can say is I encourage companies to continue doing that. I encourage authorities to provide the environment so that companies can invest and can do that. And that will create, as we say in French, an effet boule de neige, an effect of, will replicate itself and will lead to very strong results.
Jules, how do you de-risk this? Because there's a lot of potential, but getting that money and getting shovels into the ground is usually the hard part.
Yes, absolutely. When we look at the potential, is absolutely there. So just to add to what Sérgio was saying, I think is to build trust, and this is what we do as a guarantee fund, is to add that additional trust. And what is very critical that we've even seen in the market, and Sérgio was talking about it, is on the blended finance. Because what is happening that traditionally investors used to look at two axes, the return and the risk. But now we have a third axis, which is the impact, the impact on people, the impact on the planet, the impact on climate. So the message that we are also having now as we are talking to the investors is that, yes, the risk is at a certain level. We don't have to adjust that just by increasing the rates, but we should look also at the impact that we can deliver. And during the address that was made earlier, we kept on mentioning climate, green bond, gender bond. So the type of message that we are also having with our partners, with the commercial bank, is how do we tap into that huge market? When we see, like for example, the green bond market, it went in 14 years from $10 million of green bond to 100 billion. So the market is growing at a very fast pace. We talk about the gender bond. Where are we today in Africa in tapping into that market of the gender bond? Food security. So what we've seen is that the capital is becoming more and more thematic. The investors, they don't look just at the risk, but they want to address some specific type of thematic. And this is the type of message that we are.
Jeremy, you want to weigh in?
Yeah, just to build. We've talked about trust, confidence, data is the third angle that I would add. And we have to tell our story better. The problem is we went with our bond recently, where we raised 400 million. And I want to just call out our partners for supporting us. You know yourselves in this room because the anchors supported us on this side.
And the Frexim Bank, I believe, was a lead arranger.
Yeah, so we had AFC, we had Propaco, we had TDB, you know, and when they come and they say, we're putting our money down, it gives confidence to others to say, okay, so they're putting significant sums of money. But what do I talk about when I say telling our story? If we don't share success examples where we show that we can get good risk-return trade-offs, Africa becomes one block as opposed to 54 different countries with multiple different segments performing very well. People have this perception. You deal Africa, you're going to face high delinquencies, high impairment, and you've got to price for that risk. So it was very interesting as a Pan-African bank. When I asked them, how are you pricing my risk? And there was kind of this weird look, right? You know, so it's supply and demand in this situation. I say, we are represented across 35 markets. We don't have a home market. So is it South African risk? Is it Nigerian risk? Is it East African risk? Or is it Pan-African risk? So then it becomes an interesting conversation. The other thing that I would urge us to think about...
It's interesting. They see that as... They sort of turn Africa into a monolithic thing rather than seeing your asset, the fact that you're in 35 different countries, as having diversified.
Exactly. And this is the problem. Now, then if you have a situation happening, like a default happening somewhere, that now becomes blurred into Africa. Wasn't there a default? We must price for that default. We then have another problem is that scale. We've talked about scale. 400 million is small for them. They're almost thinking, why should I bother? In all honesty, when you go to a fund and they say, I'm putting in $50, $20, this is a small investment. They're saying, why can't you be raising $1 billion for your firm? But when we tell our story, they become very excited about the opportunity. And this is our duty of care, that we must tell our story better. We must be realistic. And exactly as Sérgio said, we must live up to our commitments and pay well and just build that trust back. And the last point that I would say is, and this might sound very strange, is we go to raise money and we go out to the West. I say, why aren't we raising this money in Africa? We have hundreds of billions of dollars of funds in Africa that are not invested in African financial institutions who can multiply out this fact. Now, that requires us to reflect on the laws around pension funds, investment funds, sovereign funds, to boost the support we get from the likes of World Bank, IFC, AFC, among others. I urge us to invest in those DFIs, in those institutions, because they can then invest in us, and there's a multiplier effect which will help drive the economies in which we're in. We don't always have to look outside to get money. We understand our story better than anyone else. If we cannot invest in ourselves, who is going to invest in us? So I urge us to just think about this, because the opportunities are abound, as you've said. And if we don't invest at home, I'm not sure where we're going to go in the long run.
Minister Nadia, I want to come to you on that question. You know, Jeremy goes into the market, Mohamed goes into the market, $400 million for some investors is a small ticket size. And then I look at Morocco's investment strategy as far as cutting emissions is concerned. Your goal is to cut emissions by around 45% by 2030. To pull that off, though, some of the numbers I've seen there look fairly large, $80 billion plus, which for context is about as much money as we need to bring Grand Inga, that massive hydroelectric dam, potentially, to market. If, to take Jeremy's challenge, if you're to raise that money within the African continent, how would you do it?
Well, since I'm a politician, I will respond to the question I wanted. But anyway, I think... Look, Morocco has established itself as, I would say, a big player in climate change for now more than almost 2 decades. And what is important, and my colleague who is not here, the Minister of Energy Transition, is keeping saying, we've never changed the vision since 2009. And this is very important, stability on the vision. Of course, we have been doing progress. The first steps, the government and the public sector has to invest itself. But today that we have the biggest solar plant in the world, it's working. We are massively, I would say, encouraging PPPs for this. And we don't need anymore to do a single investment in energy production in Morocco because all the investors are coming. And I think that, of course, there is a room also for African investors, not only to have good investment and good returns, but also to learn and see the expertise. But allow me to respond to the other question, and I like very much what my fellow panelists were saying. I think even in this panel, we were discussing with the outside investors, but these two institutions is the pride of Africa, and I really say it because I think that what they've been doing for the last, I would say, 20, 30 years, believing in Africa, never exiting a country in Africa, supporting all the economies, this is what the financial sector of Africa is. And they're not just creating the condition for each country to have a stronger financial sector, but they're also helping their clients to go from a country to another. So I'm adding to the long list that President KETTANI said of all the I'm so happy that you are having this responsibility in your priorities, but maybe one of them is that to maybe have the real economy get to know better each other in the continent. You've done a great job on the financial sector, but so many things to be done with the SMEs and all the other sectors. And maybe one other point for the IFC, I know that they've been supporting Africa for years, but they were also making good money in Africa, and hopefully for the IFIs who are keeping supporting us and bringing a lot of money, please let the world know that you are making good readers and good money in Africa. Thank you.
The profit incentive should never be underestimated. It just works, right? It deploys capital, drives innovation, gets institutions built. I want to wrap up with a question around energy poverty, right? Because that's going to be a big conversation that we'll have to deal with now, 2025, 2026, 2027. And this goes to the bankers on the panel, Mohamed and Jeremy, because we often tend to speak of these things in terms of, well, we have 300, 600 million Africans who don't have access to power from the grid. But at the same time, for most of the economies in which we come from, we can't essentially just do an immediate switch, right, away from fossil fuels, right? We're still going to have to use it in our cars, in our homes, our industries. A, is this a false choice that we have here? Or B, how do you actually find that balance between continuing to fund the needs for fossil fuels, but at the same time fixing the energy poverty problem that we have across the continent?
Effectivement, l'un des problèmes majeurs.
One of the major problems today is the industrialization of the African continent. When it comes to energy supply, we cannot think of tracing or writing all the strategies with everything that's been seen as achievement. If you do not have energy production capacity to satisfy the industries, you'll not be able to achieve your objectives. And so for this fact, I think the major problem by the sector, as you can see, the Pan-African Bank, as you can see for Attijariwafa Bank, in all the countries we operate from, we are highly implied when it comes to financing huge energy projects. And from experience, we've learned that the African continent is actually responsible for maybe less than 2% of greenhouse emissions on the planet. We are being asked to comply to requirements at the same rate as the countries that produce the most polluting agents, whereas we need a lot of energy, and that is why the dialogue about using clean, renewable energy is actually efficient. So we should be pragmatic. We should be pragmatic. We should have a mixture, because even renewable energy also present very important risks and significant risks. And for this, the strategy that brings together these strategies that we can have with regards to a mixture of energy sources, like Morocco did when His Majesty took the decision to launch an energy strategy, which is going to have about a mixture of about 52% by 2030 when it comes to renewable energies. So I think it was extremely a propeller in this industry, because we contributed to accompany institutions that have huge solar projects and wind energy projects in Morocco, and we've actually financed at least 2.8 megawatts in capacity of wind energy. So Morocco becomes the first country that has a wind energy capacity to this tune in Africa. So these kind of projects are really capital intensive. And these are projects for which we can find finance in local and also international reserves, but it should also go through public-private partnerships. And this is what has actually led to the best successes, because we try to minimize the maximum number of risks and also to fight against this perception of risk with regards to some countries within our African continent, and also mobilize funds under competitive conditions. But this requires a framework, an institutional framework to actually install, build trust for the private investors, for the PPPs, and also we have the environment, a contractual environment that can also comfort the trust of these investors. So the results from experience over the last 20 years show that these are very interesting projects. Of course, so there's an appetite within African institutions, but also international institutions. But the needs are really enormous, that we need to accelerate the process, given that there is a will today to move towards food security, health sovereignty, energy efficiency, and this can only be done through the mobilization of the banking sector on one hand, but also we didn't talk about the capitals sector, because the banking sector itself cannot do it alone. We would need to actually get to the capital market to actually make it a lot more efficient and mobilize this hidden hand and local currency in local savings, because we are in a continent where the informal economy actually has an important, significant role. So how can we, through the banking sector and also different actors, so the capital markets, how can we actually mobilize these local savings that are actually not being actually brought in from our teller desks? So we should actually field public opinion to actually encourage savings in local currency in the long term to contribute towards accelerating the resorption of this deficit when it comes to energy. Thank you.
When I think about the whole issue of green energy, clean energy, you know, Africa is in this highly unique situation. We contributed 3 to 4% of the problem, if you like. We then bear the brunt of the effects of climate change, which puts pressure on us financially and on governments, you know, when it impacts the vulnerable, destroys infrastructure. We already have an infrastructure gap, which we've talked about, which is $100+ billion per annum. We have a climate financing gap. We've just seen COP, where the loss and damage discussion continues. And then we have this unlimited blessings of wind and solar capacity. Wind capacity alone can finance all of Africa's power needs. Same for solar. We're also blessed with fossil fuels, which are probably a shorter-term solution to uplift lives and livelihoods and help governments manage their countries and their infrastructure, and provide exports which will help in the absence of financing from the outside world. So we yet have to comply, obviously, with global standards. We need to create this environment where we create a positive world for future generations to come into. So we have this academic numbers or academic discussion, which is we need hundreds of billions of dollars to finance this need. And where I struggle is to say, so we need these hundreds of billions. Who's going to bring the money and at what price? So then you look at all the capital of all the banks in Africa combined is less than one of the big banks in the US or one of the big banks in China. We don't have enough capital to fund our projects. So I'm not making a pitch to say invest in banks, but banks, whether it's DFIs, whether it's our partners, you invest in them, they invest in banks, then banks invest in those projects. We also need to obviously mobilize savings from our Africans, because that creates the liquidity that can be invested in these projects, because they're long-term projects, they're not 5-year projects. If we can get those savings, we can reduce the cost of funding, which gives us the potential to do more projects. So I think it's a balance between trying to utilize our fossil fuels in a responsible way in the short run, investing significantly in green, clean energy options, hydro, geothermal, solar, wind. Because if we don't solve this power problem, we are not going to be competitive in the future globally. We will not be. We have 600 to 800 million Africans who don't have power. The average use of power by an African in 1 year is what a US citizen or a US person does in 4 days. If we're going to leverage AI and technology and analytics, those computers require power. Power will be our disadvantage if we don't have it and we don't democratize it. And I think the likes of solar and wind can take that power to the last mile. And that's where we as banks want to work with governments. And I want to applaud the leadership of Morocco in what they've been able to do to lead the world. And this is the thing, not lead Africa, lead the world. So I want to really applaud you and your government and your leadership for that. So if we work together as institutions across the continent, we can raise the capital. I believe we can transform the future of our citizens at a lower price and in a more effective way. Thank you.
I don't think I could have made a better pitch for industry consolidation than what you've just said at the moment. But we'll have to leave it there for the time being. Ladies and gentlemen, please a hand of applause for our panelists. We'll just have a group photo of our panelists before we jump into the next session. Very, very briefly, I'd like to ask for your patience. Yeah, right, that's fine. All right, thank you very much. Another round of applause, please, for our panelists.